Home prices are up, mortgage rates are up, and sales at historically low levels. At some point, something's got to give. The current dynamics in the U.S. housing market just can't go on like this forever. In today's video, we're going to look at the current supply and demand data for the U.S. housing market and assess what likely needs to happen for the market to change direction in 2025. Let's get into it. If you're new to the channel, my name is Eric and I'm a professional economist as well as being a licensed real estate agent, so I can bring you a unique perspective you'll be hard-pressed to find on other YouTube channels. Let's not waste any time, get right into it. According to Redfin, a national real estate brokerage, the seasonally adjusted U.S. median home price was $441,000 in December, which was a 6.3% increase over the same time a year ago and represents a new record high. Yes, we're still seeing the U.S. median home price setting new records practically every month. This is all the more surprising given what has been happening with mortgage rates. As of January 30th, the average 30-year fixed-rate mortgage was 6.95% according to Freddie Mac. While this is lower than the recent peak of 7.79% back in October of 2023, it is still at a high level for recent history. Record high home prices and historically high mortgage rates have been a big blow to affordability for buyers. The average housing payment as a percent of median household income was 40% in December. While this is not as high as the recent peak of 42%, it is well above the 36% at the peak of the last housing bubble and well above the 30% threshold where the government considers a household to be cost burdened. Simply put, this level of unaffordability is unsustainable. The imbalance in the housing market can't stay like this in perpetuity. Let's take a look at what this has done to housing demand. The sales to list price ratio remains below 100, meaning that homes are selling below list price on average. Homes are also staying on the market longer. The average days on market was 43 in December, the highest it's been since June 2020. Housing demand is weak, but it hasn't collapsed, which is why prices haven't collapsed at the national level. Home sales are at historic lows, but there are still transactions taking place. For some people, they simply need to buy a home. This could be for a relocation for a job or some other life change. But there are a lot of potential buyers on the sidelines that are just locked out of a home purchase because it is just too unaffordable. So, what's going to change all this? For home affordability to return to a level more in line with a balanced housing market, we would need to see a notable change in incomes, mortgage rates, or home prices. Incomes are likely to continue to grow in line with historical averages, so we're not going to get a big change there. We're not likely to see mortgage rates come down much either. Now, that may not make a lot of sense given that the Federal Reserve has been cutting their Fed funds rate, but the Fed funds rate has more influence on short-term interest rates, and mortgage rates are more influenced by long-term rates like the yield on the 10-year Treasury bond. I made a video last October dealing with why mortgage rates haven't come down even though the Fed is cutting rates. So if you want a deeper dive into that subject, you can check that video out. I'll leave a link to it in the description down below. And I'll be providing an update on that in the weeks to come. So if incomes aren't going to spike upward and mortgage rates aren't going to come down notably in the short term, that only leaves falling home prices as the way to bring the market back into balance from an affordability perspective. For many of you, that may be a hard sell given that we're seeing record high prices each month lately. But like I said, the housing market can't stay this unbalanced forever. Something has got to give. And given what is happening in bond markets these last few months, that change is going to have to come in the form of lower prices instead of a lower mortgage rate. From an economic perspective, home prices are a function of supply and demand for housing. Housing demand has definitely come down. We can see that from the historically low level of home sales and the rising average number of days a property stays on the market. But demand hasn't fallen enough to bring prices down at the national level. That leaves us with the supply side of the market. We have seen a gradual increase in the number of homes on the market over the last few years, but we are still well below where we were before the pandemic. But if demand isn't going to change much from where it already is, the only way we're going to get lower prices is if we see a notable increase in supply. But one thing to remember about these national level statistics is that they are an aggregate of all the regional markets. To really get a sense of where things are headed, we need to drill down to the local level and see what is happening in individual markets across the country. That is going to be the focus of my next video. I'm going to do a regional analysis on market supply to see if we can spot some trends that will give us a sense of where things are headed at the national level and when the U.S. housing market might start getting back into balance with where it has been historically. If you don't want to miss that video when it comes out, make sure you are subscribed to this channel and hit that notification bell down below so you know right away when that video comes out. But what do you think? Are home prices ever going to come down, or are we stuck with this unaffordable situation and we will become a nation of renters instead of homeowners? Do you think there is another way for prices to come down besides an increase in supply? Let me know in the comment section down below. And if you found this video useful or at least mildly entertaining, go ahead and hit that like button down below to support the channel and help it grow. And if you think I just totally screwed up this analysis and have it all wrong, go ahead and give this video a thumbs down. Let me have it in the comment section below. Either way, thanks for stopping by. I'll see you in the next video.